April 12, 2026, buckle up because today's crypto news has everything: war, drama, a presidential meme token meltdown, and Saylor doing Saylor things. Quick shout to today's sponsor, Compete Token, the gaming crypto that actually has real games. Link in the description. Bitcoin just slipped below $71,000 as US-Iran peace talks blew up in Islamabad and took our portfolios with them. Trump ordered a naval blockade of the Strait of Hormuz, threatening to interdict any ship paying Iran for safe passage, and nearly $350 million in long liquidations got wiped in 24 hours. Nothing clears out the weak hands quite like geopolitics with a side of warships. The World Liberty Financial Token, Donald Trump's family-backed crypto project, just hit a new all-time low of 7 cents, down 83% from its peak, and it's completely self-inflicted. On-chain data showed wallets linked to World Liberty Financial dumped $5 billion of their own tokens into the Dolomite DeFi platform as collateral to borrow $75 million in stablecoins, then moved $40 million straight to Coinbase Prime. Justin Sun called it treating the crypto community as a personal ATM, which is honestly the most accurate thing Justin Sun has ever said. World Liberty Financial's response? Threatening to sue him. The classic move when you've got no actual defense. Michael Saylor just posted the chart, you know the chart, signaling that Strategy is about to buy even more Bitcoin. Strategy is already sitting on nearly $14.5 billion in unrealized losses. Their average cost is $75,644 per Bitcoin, and Saylor's response is literally, think bigger. In March alone, Strategy accumulated 46,233 Bitcoin, nearly 3 times what miners produced that month. At this point, he's not buying the dip, he is the dip. Senator Cynthia Lummis just dropped a bomb. This is America's last chance to pass the Clarity Act before at least 2030. White House crypto czar David Sachs echoed the urgency. Coinbase CEO Brian Armstrong said it's time, and even SEC Chair Paul Atkins is backing it. Between November midterms potentially reshuffling Congress and the clock running out this session, the entire crypto industry is basically on its knees begging lawmakers not to fumble it again. Europe's biggest banks are done having exploratory conversations about stablecoins. They're now actively picking infrastructure partners and preparing to go live. ING, UniCredit, CaixaBank, and BBVA are all chasing a MiCA-compliant Euro stablecoin called Kivalis, and Chainalysis projects stablecoin transaction volumes could hit $1.5 quadrillion by 2035. American banks spent years calling all of this a fad. European banks are now building the actual rails, while those same American banks are still scheduling meetings titled Blockchain Tokens, Threat or Opportunity. Researchers just found a way to make Bitcoin quantum safe without touching the protocol at all. Starkware researcher Avihu Levy published a scheme using hash-based puzzles and Lamport signatures that works entirely within Bitcoin's existing scripting rules, requiring no soft fork. It costs a few $100s per transaction and takes about 70 trillion hash attempts, so it's definitely not your daily coffee run, but it's a genuine last resort option if a quantum computer ever comes for your wallet. Ripple got hit hard today. A sudden wave of selling dropped it from $1.36 to $1.33 in minutes on extremely heavy volume. Key resistance now sits at $1.40 to $1.41, which has capped every single bounce attempt. Analysts are split between more downside and a sharp reversal, which is analyst speak for nobody knows, but the bears are clearly running this trade right now. When Bitcoin sneezes, Ripple gets pneumonia. Ether Machine just killed its $1.5 billion Ethereum treasury dream. The planned NASDAQ listing is officially dead. The firm and its Dynamics SPA partner mutually terminated their merger, citing unfavorable market conditions, and Trend Research separately unwound 651,000 Ethereum at a $747 million loss. Ethereum treasury companies had a whole moment in 2025. Now they're having a very different kind of moment. We're now halfway to the 2028 Bitcoin halving, and the mining industry is already getting squeezed hard. Marriott Holdings sold 15,000 Bitcoin in March, Riot Platforms sold over 3,700 in Q1, and the upcoming halving will slash block rewards to just 1.56 Bitcoin per block in an environment of record high hash rate and spiking energy costs. The 2024 halving rewarded miners who rode Bitcoin's price strength. The 2028 halving is going to separate the serious operators from everyone else. When Trump ordered the Hormuz blockade, oil futures on Hyperliquid spiked 7%, and the platform processed $1.53 billion in WTI volume in real time. Think about that for a second. While one of the biggest commodity shocks in months was unfolding, a permissionless on-chain exchange was handling over $1.5 billion in volume without a single phone call to a broker or a clearinghouse. This is exactly why DeFi exists. The future isn't coming, it's already trading. That's a wrap on today's news. Don't sleep on Compete Token, link in the description. April 12th in the books. Stay sharp, stay bullish, and we'll see you tomorrow.